In 3, 2, 1, we're live. Welcome. Just a quick update on mortgage interest rates. The always ongoing hot topic. So it is late October. The Fed, the Federal Reserve, cut interest rates 50 basis points about a month ago. Okay. Since they've cut the 50 basis points, we've seen the 30-year fixed mortgage rates have risen meaningfully. And you may be wondering, how can this be? Well, let's just start off by saying the Fed is reducing the Fed's fund rate, which is not mortgage interest rates or even long-term rates at all. Their goal is to monitor and adjust short-term rates, literally a rate that's good only overnight. And banks use these overnight rates to help lend money to one another. And it's a building block for all of the interest rates, okay? Now, when the fund changes the Fed's fund rate, it almost immediately impacts things like money market accounts, credit cards, car loans, home equity lines of credit, etc. So you will feel the impact, but not on long-term rates such as mortgages. So these rates are impacted more indirectly. An example of this is when the Fed cuts rates and investors' return on money market funds decrease. It's anticipated that the Fed will continue to lower rates, which in turn will continue to reduce their return on money markets. Investors may want to preserve their returns by selling their money markets and buying longer duration bonds like the 10-year treasuries. As more 10-year treasuries are purchased, their price tends to improve, which in turn lowers the yield. Mortgage rates typically follow the direction of the 10-year treasuries. So if you want to know what's going on the 30-year note, that's the index to follow. Now, recently, in anticipation of the well-telegraphed rate cut, the 10-year treasury and mortgage rates had declined significantly. Therefore, the financial markets had already priced it into the rate cut by the time the Fed had made the announcement. After the Fed's cut, a surprising strong jobs report and stubborn inflation data was released. And unfortunately, this has created a spike higher in the mortgage rates. So it's quite possible that the Fed will continue to reduce the rates and eventually see that filter into the mortgage rates as well. As for now, we're seeing kind of a pattern. Last October was kind of a trickle up in rates. This October 2024, we're feeling no different. It is a little uptick in the interest rates. Hunker down, be positive. Rates will be coming down, but just an update of the correlation with the short-term and long-term rates and where we're currently seeing the market. Talk to you soon. Take care.